video on Pfizer. So pretty interesting story so far. Last week I bought about 70 shares of Pfizer at a little over $36 a share. I also had about 35 shares before that, even lower, about $35 a share. And I sold a covered call for first week of December at $39. Looks like Pfizer is pretty close to making that vaccine be very effective. There's news stories this morning saying that over 90% effective for the drug in the stage 3 trials that they're in. So as of now, before market open, the stock's at 42, and I have a cover call at 39. So there's a pretty good chance that my call might be called in pretty much today. Not the best of news because I could have had it at 42 instead of 39, but that was a pretty big trade so far. Made close to $1,000. I think it was like $853 on this total position because I sold this covered call at over $100. The stock went up about $4 a share times about 110 shares I have, so plus dividends that I received. So overall, it's going to be a good trade anyway. I'm trying to see what I want to do with it. I might end up buying back the call, hopefully before it gets exercised at 39. It's going to cost me a few $100s to do that because the stock price could be at 42. At least that's what it is at pre-trading right now. Again, it's around 8:20. So in about 10 minutes, we're going to see what happens in terms of will my option be exercised or will it not? I mean, there's a chance it might not, even though a few dollars a share is a pretty good gain. The people that bought my call are going to be up quite a bit, even more than I am, because stock price is way higher than that. So the option has a lot of intrinsic value right now. However, there's a chance that they might hold it because the stock could still go up. The option could still be worth even more in the future. So very curious what's going to happen. This hasn't happened to me before in my about 20 years of investing career. So pretty interesting to see what will happen. If the call gets exercised at 39, I got to make some decisions as well because I'll be over 30. That'll be about $3,900 that I'm going to be getting back in my brokerage. So I might add to more positions like Intel. I could buy 100 shares of Intel with my current holdings, still have a little left over, and I might end up doing that. And then going back to Pfizer at some point if the stock price heads back down at some point, because it looks like that Pfizer is going to be worth quite a bit. However, early indications show that Pfizer is not going to be gaining too much in revenue from this vaccine if it actually does work. I mean, obviously it won't hurt them, but it's not going to be as dramatic as people think. So the stock might be over-exaggerated going up. That's possible. So just my general thoughts on this, definitely like this trade no matter what happens, even though I could have made quite a bit more if I just held on to it compared to just selling the covered call. That is going to happen at times, but the main point of covered calls is to get income, and definitely I got about $110 premium last week on just Pfizer alone, so that's one of the main reasons why I did it. I was able to buy 2 shares of Intel to get even closer to 100 shares of Intel, and then do the same thing, rinse, repeat. So one of the things that a lot of people think is when your call gets exercised, it's a bad thing because obviously I could have made about $300 more if I just held my shares to 42 instead of 39. However, I still consider this a good thing because I'm still up in the trade quite a bit in a pretty quick time period. Well, the worst thing that could happen to a covered call position is if the stock tanks. Obviously, if the stock's worth much less, even if you make money in the premiums, you'll still end up being negative because you own those 100 shares. So one thing when you're doing covered calls, make sure you're doing it on companies that you believe in. You should still have a long-term time horizon on these calls. I typically sell out of the option about deltas of 20 to 30, so there's a very unlikelihood that the calls will get exercised. In this case, when I sold my covered call for Pfizer, it was about a 32 delta, so there was about a 1 in 3 chance that this was going to get to that price anyway. At this point, it is over that price, so let's see what happens here. If you have any thoughts on this, how you do covered calls, if you hear dramatic news and the stock price shoots up way higher than your covered call strike price, let me know in the comments down below. And I'm the investing teacher, high school science teacher, teaching others how to invest. I hope you guys have a good day.